Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. You see, when it comes to railway stocks, the major players have rallied over the past few years, thanks to India's massive railway modernization drive. But beneath the noise and headline-making stocks, there's a quieter set of companies powering the engines of India's rail revolution without catching much investor attention. These low-key players with niche specializations, strong order books and strong financials aren't in the spotlight yet. But they're deeply entrenched in the supply chain, making coaches, signaling systems, forging axles, or providing consultancy services in India and abroad. As part of the Union Budget 2024-25, the Indian government announced a record capital outlay of 2.55 trillion rupees for Indian Railways, the highest ever. As this megatrend unfolds, these overlooked railway stocks might just be the next big multibagger stories. Let's take a closer look at the under-the-radar stocks quietly driving India's railway transformation. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. First on our list is Transrail Lighting. Transrail Lighting is an integrated EPC company. It specializes in transmission and distribution along with in-house manufacturing of latest structures, conductors and monopoles. The company is certified by CE and NABL. It's deeply involved in railway electrification and civil infrastructure projects, including bridges, tunnels, and elevated roads. Among its marquee assignments under the Bharatmala project is the construction of India's longest river bridge on the Kosi in Bihar, awarded by NHAI. Coming to its financials, the company's Q4 of FY25 performance was impressive, with revenue from operations rising 40% year-on-year to 19.5 billion rupees. Driven by a strong rise in revenue and record new orders, it reported a 27% jump in consolidated net profit for the March quarter to 1.3 billion rupees. Transrail also made a strategic international leap by securing its first solar EPC contract for an 80 megawatt ground-mounted solar PV project. Looking ahead, Transrail Lighting is focused on strengthening its position as a leading infrastructure turnkey solutions provider. Next on our list is Timken India. Timken India, incorporated in 1987 as Tata Timken Limited, is a joint venture between Tata Steel and the global Timken company. It is a prominent manufacturer and distributor of anti-friction bearings, mechanical power transmission products, and related services. Now part of Timken Global Group with Timken Singapore Pte. Holding a 68% stake, the company caters to a broad customer base across sectors like aerospace, mining, automotive, wind energy, construction and railways. Coming to Timken's financials, the company has delivered a 27.3% revenue CAGR and 39.9% net profit CAGR over 3 years. For the March 2025 quarter, Timken India reported a 4.7% year-on-year rise in revenue to 9.4 billion rupees, while its net profit for the quarter jumped 32.1% to 1.8 billion rupees. The company has recently ramped up manufacturing with new facilities in Bharuch and Jamshedpur, producing high-performance bearings for railways, automotive and heavy machinery. Strong export growth has also played a role in Timken's growth. Timken is pursuing opportunities in sectors such as electrification in railways and the EV industry. It is optimistic about the potential in these areas and is expanding its portfolio to cater to the evolving market needs. Third on our list is Ergi Equipments Limited. Ergi Equipments Limited, the sixth largest air compressor maker globally and second largest in India, has a strong international presence across 120 countries with only 60 of 600 distributors based in India. The company is undergoing leadership changes and ramping up investments in digital systems and financial controls to improve global efficiency. New product lines like vacuum pumps, stabilizers, and oil-free compressors are being introduced. Coming to its financials, in December 2024 quarter, its revenue grew 3% year-on-year, but net profit fell 4% year-on-year. The company is currently facing pricing pressure from low-cost Chinese players, particularly in the lower kilowatt segment. Going forward, new product developments are expected to drive the overall growth. It's entering the vacuum pump market with a focus on rotary vane type pumps, targeting a market size of 4 billion rupees in India. A new stabilizer technology is also designed to improve compressor efficiency, aiming to capture a significant share of the market by offering a lower cost alternative to variable frequency drives. Meanwhile, it's also getting into the oil-free compressors market with a focus to disrupt the oil-flooded compressor market by offering competitive pricing and efficiency. All in all, this capex is going to cost the company 6 to 7 billion rupees over the next 5 years. Fourth on our list is APAR Industries. APAR Industries is the world's largest aluminium and alloy conductor manufacturer, the world's third largest transformer oil manufacturer, and one of India's largest cable manufacturers. Its expansive market presence extends to global leadership, solidifying its position as a market giant. The company has a total order book of 83 billion rupees in the conductors and cables business. It's the largest supplier of cables for Vande Bharat trains and a market leader in conductors for Indian Railway electrification. Coming to its financials, in the past 5 years, APAR Industries' revenue and net profit have grown at a CAGR of 15.1% and 43.5% respectively. This surge in profitability has resulted in a healthy set of return ratios. The company's ROE stands at 19.9%. APAR Industries' competitive advantage lies in its strong market position, supported by efficient manufacturing facilities. Moreover, the Ministry of New and Renewable Energy has a target of awarding 50 gigawatts per annum of renewable energy capacity, including 10 gigawatts per annum from wind energy between 2024 and 2028. The company believes that if even a portion of these aggressive plans get executed, the demand for conductors, cables, and transformer oil will all remain strong. Last on our list is Hind Rectifiers. Hind Rectifiers Limited, established in 1958 in technical collaboration with Westinghouse Brake and Signal Company Limited, UK, is a prominent Indian manufacturer of power, electronic, and railway transportation equipment. The company designs and produces converters, inverters, propulsion systems, and rectifiers. It also designs a wide array of railway transformation equipment, including traction transformers, motors, switchboard cabinets, regulated battery chargers, inverters, and modular pantry systems. It primarily caters to two segments: railway transportation equipment and industrial power electronics. The client base exceeds 500 customers with a presence in over 30 countries, and its major clients include Indian Railways and BHEL. A significant portion, between 70 to 80% of its revenue, comes from the railway sector. In FY25, the company invested 0.43 billion rupees in backward integration to enhance manufacturing efficiency and reduce supply chain dependency. As of March 2025, the company reported a robust order book of 8.93 billion rupees, representing a 67% year-on-year increase from 5.34 billion rupees in FY24. Key wins in FY25 included a 2 billion rupees supply order from Indian Railways for electrical components and equipment, along with additional contracts worth 0.73 billion rupees and 0.98 billion rupees. In Q4 of FY25, Hind Rectifiers posted a total income of 1.85 billion rupees, a 22% year-on-year increase. EBITDA stood at 0.2 billion rupees with an improved EBITDA margin of 10.9%, up from 9.1% in the previous year. Profit after tax for the quarter came in at 0.1 billion rupees, reflecting a net margin of 5.4% compared to 3.4% year-on-year. The management remains highly optimistic, citing a strong execution pipeline, margin visibility, and a healthy order book. Indian Railway region is undergoing a major change, and it is not just the big names running the change. Behind the curtain, many smaller companies are playing an important role by creating systems, equipments, and infrastructure. From traction transformers to specialized cables and electric components, these players are helping Indian Railways modernize at scale. Strong order books, steady capex, and a focus on backward integration show that these firms are not just participating in the growth, but they are leading it in their own way. As the Indian Railways continue to electrify and expand, these companies are well placed to benefit. For investors, these names could be worth tracking closely as the sector picks up even more speed in the years to come. As always, investors should conduct their own due diligence, paying close attention to financial performance, order visibility, execution risks, and corporate governance before making investment decisions. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.